Hello traders, this is Rich Derrick from tradesight. Right now we're going to go through the preview for the trading session that we're coming into. That's going to be December 19th, 2012. Right now we're just going to take a quick look at the what the averages gave us on this current session and talk about what to expect in the upcoming session. The market was very strong on balance, breaking out of a key trading range and making new highs on the move. As you can see, we had a good performance out of the ES and the NQ, and as you would expect, gold, silver, and a lot of the other commodities were a source of funds, as well as also the bonds. But let's move on to the charts and take a look at and see what the charts are telling us and what to expect for the coming session. All right, now here's a look at the ES futures, which closed positively on the day. We settled basically in the area of the 4/8 Murray Math level, 1437.50. We cleared that prior high, which pivoted things back to moving to a new range high on the move. The one thing that is definitely a cause for concern, though, is the MACD is getting pretty close to that terminally overbought area, up around plus 200, and also you can see the money flows have been steadily marching higher here and are at the highest reading that we've had in about a quarter. So we definitely have some positive momentum in the market, but it's beginning to get very overbought. The secret count, the tradesight secret count, is going to be 8 bars up as of the close this past session. So we've got definitely a week's worth of potential new highs before we get a reversal warning from this. But that's definitely something that we're going to be keeping an eye on. Now the NASDAQ futures, the NQs, made a new nominal high in the move. Didn't really break out by too much, but it certainly did record definitely a much better high close here versus all the other closes. This is the previous higher closes right in this area right here. So we're kind of back up into this area of resistance right in this 5/8 area on the Murray Math scale. This is definitely going to be an area where we're going to have to maybe do a little bit of work here to pivot through, and also make sure that you keep an eye on this CCI, which is not quite as overbought as the S&P side, which is not necessarily a good thing, and we'll talk about that in a little bit more detail later. But key areas are going to be this 2695 area, and then this swing high right here, which is pretty much where we closed on this past session. Internally, the market has a couple of issues. One is with this climactic reading that we just recorded in the total put-call ratio. This is the total put-call ratio, which is a contraindicator. So when this is recording very low readings, that means that there's an extreme amount of buying pressure in the market and is really poised to reverse. We got this on Friday, and sometimes it takes an extra day for this to really be felt in the market. But usually what happens is when you get these climactic readings where there's a preponderance of calls rather than puts being purchased on the session, what usually happens is you wind up with a very sharp down day within 48 hours of that reading. And this came last Friday, so on Tuesday we could definitely, or Wednesday rather, we could definitely have a very sharp reading, very sharp move to the downside in the overall equity market. Now the chief cause for concern internally for the bulls is going to be this reading in the 10-day trend. This is our 10-day trend, the 10-day simple moving average of the closing trend, or the New York Arms. We define that as a close below the 0.85 threshold. And once you get a close below the 0.85 threshold, what that means is that the market is sufficiently overbought for a lasting reversal back in the other direction. So it takes buy-side pressure to get that trend reading down below 0.85. And once you have recorded that close below 0.85 on the 10-day average, then you tend to have a lasting reversal back in the opposite direction, which will turn overall equity prices lower. So this is definitely something that we're going to be watching the next couple of days here. Now here's a look at our multi-sector daily chart, and what this is telling us is that there has been some definite rotation into some risk-on assets. We're definitely seeing the XAU or the gold miners and gold shares and gold actually itself acting as a source of funds while money's rotating back into the more growth-oriented and more speculative type equities. Right now we've got the BKX. The banks have been leading the charge to the upside here. That's our green line. That's really been the top performer of late, and it has made a very, very strong move to the upside. That is the BKX. Now let's get down to looking at the individual charts themselves. Here's the oil services index OSX. This was the strongest major sector of the day, and you can see that it had a very, very aggressive candle to the upside here, really whacking out some decent levels here. It's settled just above this prior high and is now making a new closing high on this move back to the upside here. This is a very, very large range candle. This index was up 3% on the day. You can see that it just barely touched this 4/8 Murray Math level and is probably now going to have kind of a measuring day tomorrow just to kind of work off this large range expansion that we had in the most recent session. We have worked up here very, very quickly, but one other important thing to note is that now we're above all of the major moving averages. We're above the 10 EMA, the 50, and also the 200 DMA. So this is a very, very positive thing for the OSX. Now the BKX, the banking index, also made a new high on this move, on this inflection off of the previous low in late November. This chart now is again back above all of the major moving averages, which is definitely a positive. It has closed a pretty good distance above the 4/8 line. That's right at that 50 level. The next major overhead is going to wind up being these prior highs here, and certainly this prior closing high around 51.5. The SOX was up on the day, but really continues to kind of struggle and more or less underperform. It is above the 10 EMA and the 50, but so it is definitely short-term positive. The 200 period moving average, the green line here, definitely has been an area of resistance and where sellers have been living. But break back above this 6/8 level here is going to be very notable. What we've really got to see here is we really need to see some strength come back into the SOX, because the SOX tends to lead the overall NASDAQ, and then obviously the NASDAQ, which has been kind of relatively weak versus the S&P, would then hopefully take shape and really start to turn for the better. But that remains to be seen. Right now we've got the SOX index at key resistance, and we've got to monitor to see whether this can take out that 609 level and get it closed over about 390 and about 3/4. Once that happens, then we can start talking about some rotational strength back into the NASDAQ. But let's take this one candle at a time and see how the SOX performs tomorrow. Now here's the BTK, which is one of the larger NASDAQ sectors, believe it or not, and certainly one of the more volatile ones, and has been carrying pretty good relative strength throughout the whole year. We've got pretty good decline here. We got somewhere in the area of the 0/8 line, but never really gave it a good run. We've turned back up again, and we're kind of back in this area of the prior high. We've touched this last week's high again right here, and really need to push through that to get up here to potentially fill this gap up here in this 1600 area, which would be a very, very strong finish for the year. So this is definitely something to keep in mind for the longs this year, as we get into the last few trading sessions of this calendar year. Now, with the weakness of gold, the XAU was certainly the last lagger on the day. It's really been in this pretty steady downtrend, and has been a source of funds here ever since we really started to pivot higher and try to make new highs in the broad market, and as money has been rotating back into equities. Now this is definitely a cause for concern is for the commodity folks, but I think the real problem is going to wind up being for the gold shares themselves. So let me turn the chart over to the gold futures themselves. So stand by 1 second. Now here's a look at the gold futures themselves. We've had this kind of distribution and this kind of almost falling out of favor. We did get this very shallow seeker exhaustion buy signal. We had the 1 through 9 setup phase set up here, and we had this very flat countdown phase, which really didn't cover much range and got very little extension off of the 9-bar setup. The risk line is right here, which is our magenta line. You can see that we touched that today. That's really the line in the sand as far as I'm concerned. That's that 1660 area. If gold breaks and settles below 1660 and then trades one tick below that, then this secret exhaustion buy will be null and void, and then we're going to have to kind of rethink this signal. This signal, again, as I was trying to imply, is kind of weak already in just the way it's set up. We've got this very shallow pullback in very little range covered to the downside in this 1 through 13 setup. So I would not be surprised to see this break to the downside, and if it does so, then we're going to be looking for support initially at the 1/8 level, but then obviously the more important support is going to be 1625, where the 0/8 level is. It's a Murray math level on this chart, obviously, and it's also the origin of this breakout that we had earlier in the year. Here's a look at the oil futures. One of the other things that we always track here at tradesight. The oil futures are not that different looking than the gold shares. This is the 1 through 9 setup phase in the oil futures, and then we got this 1 through 12 in the seeker countdown phase. We came up one candle short of the ultimate exhaustion, so we're still waiting on that. We need one more candle for the actual reversal to be printed on the chart here, and we're very close, but we still need one more candle where we have a good down close that's going to be equal to or less than this 8 candle right back here. So again, tepid price action. It's really been fairly sideways here, but there is definitely room for this to decline a little bit more before we can actually record and call that high probability seeker exhaustion buy. All right, folks. So just to kind of wrap things up here, I think the things that we need to be thinking about tomorrow is the pretty acute overbought condition that the market has in it. We've got the 10-day trend at a very climactic reading, well below the 0.85 threshold. We have that climactic reading in the put-call ratio, and we also have a couple of other intramarkets that are really signaling that we're getting very low in the tank here as far as gas goes for this rally to continue. So doesn't mean we're going to get short on the open, but what it does mean is that once the market does start to roll, we're definitely not going to be passing on any short setups that present themselves, and we're not going to be getting stubborn with any long ideas and digging in. Thanks for listening. This is Rich Derrick from tradesight, and good trading to you, and we'll see you tomorrow night.